What's going on? Market move sequence 6, 7, 6, 7, 10, guys. The last time we had a sequence very similar to this, the market has actually dropped 20% within a 70-day time frame. You should also know that it dropped 10% within literally 2 weeks following such a sequence. So this sequence literally equals to a market top and a shift in this hugely positive uptrend that the market had over the course of the last 90 days. This is where the probability of a sharp drop beginning literally is tracked by hours, not days. So if you're not familiar with the sequence, or if you are trying to understand the sequences, I'm going to bring some light in this discussion, and now I'm going to do it briefly, so you may have a bunch of questions left over. So the easiest thing to do is to schedule a 20-minute free coaching call and ask any questions about trading by simply clicking the link below this video. So without any further ado, here's what we got going on. Last time in September of 2018, we had pretty much identical sequence to the one I just described to you on the previous slide, literally portrayed on the chart by these orange dots right here. Now, it was the last couple of days of September in 2018 and the beginning of October 2018. Now, what has followed such a sequence is clear. You see a sharp drop-off literally within 2 weeks following this sequence. Now, 24 days, we were officially now close to 11%. Now, you should also know that within 74 days, the market continued to drop and created a drop close to 21%. By December the 24th. But it was all identified by our sequence right here at the very last couple of days of September 2018, while the general consensus has been highly bullish, where everybody was blinded and couldn't see but the market only going one direction, and that is higher. Pretty much it's the same circumstances that we are observing right now, where the majority of the market participants, cannot see the market going lower at any point in time, nowhere in the near distant future, and they think just because the Fed is buying, therefore they should be buying as well. Now, apparently, the Fed was highly positive on lower interest rate environment, even right here. So the same argument applied back then, maybe not to as great extent with all the extra stimulus that's going on right now. But the question is, can the stimulus itself save the economy? The answer is simply no. In the conditions where there's no production, it's simply money being printed, as discussed in the prior couple of videos, this is easily the type of setup we could be going into. Now, instead of focusing on the news, what I believe any trader who actually is trying to make a substantial amount of money in the market should really be paying attention is the charts. So on the next few charts, I'm going to point out some similarities that create an almost match-perfect condition for the market to do what it has done shortly after the end of September in 2018, and that is a 10 to 20% drop within a specific time frame of 20 to 74 days. I believe we could easily see this type of formation in the market. Now, notice that as a matter of fact, if you take a closer look at the overall formation, we've been talking about a lot of move sixes, and if you've taken the 13 markets move course, you know exactly what that means. But I want to point out the formation that was actually created during that drop. As you can see, it's not just a one simple clear drop where things just begin to drop and they never bounce. There were 3 bounces overall. This is a characteristic of a move 6. It's still, the market participants are highly complacent. They believe that the market can do no wrong, and you will see a setup that resembles a triple top after the actual top has been set right here. So basically the market does not reach the prior top, which is exactly the condition we have right now. The market topped out at 33.93, back in January of 2018, and since then had a huge drop, which we accurately predicted. Now we had a huge run-up, which we nailed the bottom of that huge run-up. And now we're going into the setup where we're pretty much creating this. So now the market is going for these larger size move formation that's being created on a longer time frame chart. Understanding this pattern is key because recently we had such a pattern develop on the chart of US dollar. Clearly same type of the condition as you can see right here. The importance for you as a trader to know not what's happening right now, but what is going to happen next. So in the case of dollar, similar chart pattern, pretty much identical to the one I've shown you, and this is the move lower in dollar. Now at this point, okay, the main challenge for most of the traders, guys, most of the traders that trade, I mean, they happen to make 100, 200 bucks, okay, maybe a few $100, and the reason so is because the main challenge is limited vision. And here's what I mean by that. Limited vision. It's easy to try to see what the stock is doing when the price action, say for the day, is crazy strong, and it's easy to see if the stock is up, maybe something like Amazon, 50, 60 bucks. It's reasonable to assume it can move another $10, $20 higher for the day, okay? And so it's the limited vision that prohibits 99% of the traders to create some substantial wealth in their trading account. So they can only see what's about to happen over the course of the next 10, 20 minutes. And during 10, 20 minutes, you're not going to get any substantial crazy moves, okay, that you're going to be able to profit substantially. Those short-term moves where you stay in the trade for 5, 10, 20 minutes, they can make you just a little bit of money. Now, the problem lies that every time you do nail a short-term move that is just limited to 10, 20 minutes of your vision, okay, right after you take this profit of a few $100s, you have to go and find another setup that's going to continuously move your account higher. So most of the traders, okay, they're blinded by the price section. In other words, what's now, what's now, what's now, and they actually fail to answer the most critical question. Is what the fuck is going to happen next? That is the only information you need to know as a trader if you're trying to build your account to the moon. Okay, so as most of our students, okay, realize that it's a slightly longer time frame move. It's not the move where you stay in your position for a year, 2 years. It becomes more of an investing strategy rather than a trading strategy. This channel is for traders. So understanding what the market could do, even though you may be looking at the price action right now and everything is super bullish, but understanding what the market could do, not now, but tomorrow and the day before, or over the course of the next 72 hours. That is what will get you paid if you're trading weekly options, okay? Most of the traders mistakenly say stuff like, oh, well, I'm gonna, just buy me some extra time. Because, hey, what if I'm wrong? What if the market doesn't drop? What if the market doesn't go down? What if? Well, that tells me that that particular trader has no solid foundation understanding why he should be taking trade right now in the first place. The only time you should be buying longer time frame contracts is when you believe that the overall move is going to take a longer time frame to materialize. If you calculate that the drop is coming now within the next 72 hours, you shouldn't be going out there and buying a contract that expires in 6 months. You shouldn't be buying a contract that expires in a month. You shouldn't be buying a contract that expires in 3 weeks. You should buy a contract that's got the shortest time frame of expiration. Because by simply implying the philosophy that, oh, I'm just going to buy me some extra time, okay, you're also going to limit your opportunities to take your account substantially higher. What you're going to end up doing as a result, you're going to end up paying too much for your options, because what you're really doing is paying extra for the extra time on the contract. And when you do that, your costs are going to be super high in relation to the potential move. Even if you get the move right, you're not going to be able to make a ton of money. So if this is not clear to anybody, please make sure, okay, that you click the link below. You get more information on how to improve in that area when you're selecting your time frames, when you're selecting your strikes and things like that. But the most important thing that I wanted to point out, as a trader, most of the traders, they're mesmerized by what is happening now. They do not ask themselves the most critical question, and that is, what is next? So with that said, I'll give you a quick example. Okay, when Tesla short-term bounces after earnings and creates a $70 move higher, the trader thinks that this is actually bullish. If you've listened to our 500 videos, the last 500 videos on the channel, guys, it is clear. You should know by now that the initial reaction in majority of the cases is not going to be the true reaction of the market. But yet, an average trader, a typical trader just happy with a few $100 a day, okay, they're simply looking at this. Okay, what they don't see is what would get them paid, and that is this right here. See, when short-term move, initial reaction is higher, that's all they focus on. You may be thinking like, oh my God, they're buying it again. Okay, what you forget and completely neglect is this bigger move that would actually take your account to the moon right here. Now, let me give you another example. Or actually, it's not just an average trader that can't see it. Fucking Wall Street can't see it either. Okay, so they only state the fact, right? I mean, if you watch CNBC or Bloomberg, they will never come out and say, "Oh, watch Tesla go first higher after hours, after earnings report, and then drop." What you're going to see is them stating the fact after it has already happened. So if you are the type of trader that typically listens to the news, it's going to be very difficult for you to trade as a rock star because you're just reacting to the shit that has already taken place. You have to be a step ahead if you are hopeful in evolving into a better trader, and if you're hoping to catch bigger moves in the market that will move your account substantially. Okay, so they're stating this after the drop in Tesla shares has happened, right? So they're saying, okay, after trading higher, then Tesla goes lower. Okay, fucking where were you, okay, when Tesla moving higher? Why didn't you tell me about this, okay, before? So if you follow in the news, you're simply going to be reading the stuff after the stuff has already taken place. And so why was now nobody telling you to short Tesla ahead of the earnings or on the pop after the earnings? So after the drop, after that 300-point drop that we basically talked about in the video posted before the earnings report, after they've watched the drop, now they're coming out and more analysts are saying, oh, it's now time to short Tesla stock. Where the fuck were you while Tesla was $300 higher? Okay, anybody can short the damn thing when they're looking at the price action and it's dropping. Okay, as a matter of fact, that's the most common mistake of a short seller is you looking at the stock, it keeps dropping, you want to short it right there and then. Okay, which is something that you definitely shouldn't do as a short seller. Because at that point, again, you're running into the same circumstance. You're paying too much for the damn option, okay, because the price at this point is substantially inflated. You're paying the extra premium, especially if something is dropping sharply. And then if the drop slows down, you're wondering why the fuck you're losing money. Okay, so guys, if this stuff does not make sense, again, click the link below, get more information about this. But how does this pertain to the situation with the Federal Reserve announcement yesterday? Okay, so you are probably trading yesterday, you're looking at your screen and you're like, well, clearly, I mean, I knew I was right. You know, just buy if the Fed is buying, okay? Well, this is what you were looking at yesterday, right? What you see is this, the price action, basically, the market drops to close to 3,200 again, bounces out of it, and finishes like 32.57. Okay, so what you hear is Fed is buying. You keep hearing on the news stimulus, stimulus, stimulus. Okay, you're thinking, okay, that's the reason for me to buy the market. Now, here's the problem with that. Okay, what if everybody's fucking wrong? Oh, Leonardo, here you are with that shit again. Everybody's wrong and you're right, guys. The charts don't lie. If you really focus and you look at them on multiple time frame charts, they will tell you what's about to happen. So maybe you were trading yesterday and you bought a bunch of calls because you're like, oh yeah, Fed is not raising the rates. They're not even thinking about raising the rates. I need to go buy some fucking calls. So when you were thinking that, you were looking at your screen, you were seeing a bunch of green candles, and it made sense for you to do that. Why? Because you were focusing on what's now. You were not focusing on what is going to be next. And if you focus on 13 market moves, sequences, oftentimes it will be able to predict what actually comes next. It's not going to be able to do it every time because sometimes, you know, your probability of the sequence developing on day-to-day basis is not going to be a high probability. In certain instances, it's going to be 90+%. In certain instances, it's going to be 50%. So you don't take big positions on days when the probabilities are low. You take bigger positions on days when the probabilities are high of a market doing something. So this is what you were seeing. Green candles, market to the moon, stimulus, Fed, blah, blah, bullshit, okay? What you were not focusing on is this right here. Okay, the fact that while the market was higher, moving higher like crazy. I mean, we had a huge move in the market higher, right? And what was happening to the VIX? Well, with such a drastic move higher, yesterday basically bouncing off the 3,200 level, moving 50 points higher intraday, okay, with most of the action actually taking place right after the Federal Reserve announcement, okay, what you're neglecting is this big divergence that points that this market is at the edge of a waterfall. So typically when the S&P 500 index moves by this much, within a short amount of time, you would have a sharp drop-off in the VIX. And the VIX did drop, but in relation to the move in the S&P, it did not drop barely by anything, and it held the level of 24 strongly. So when you have an outsized move in the S&P in relation to a prior few days where we've been basically, you know, maybe trading 20 to 30 point range, when that range is actually increasing, but the VIX range is not increasing while it actually should, that is a certain giveaway that the big divergence is happening right now, and the next move is not going to be higher, even though the price action of the S&P 500 futures will tell you, if you stare at it, Jesus Christ, oh my God, we're fucking going higher. But you're not seeing this. You're not paying attention to the patterns. You're not paying attention to the divergence. You're not paying attention to the stuff that you really should be paying as a trader because you're watching the news too damn much. Okay, so what you also don't see is this, which is a head and shoulder formation in 5-day, 15-minute chart, which point to a high probability of a move lower in the market, not higher. So the key point here, guys, is this. If you want to be better, 99% of the traders learn to process the information through chart patterns and divergences instead of market news, okay? Because you have to understand, guys, if you really break this down, by the time you're watching the news, okay, the big institutional investors, they're already in and out of the trade. So the best probability outcome for you, if you're watching the news, is maybe you're catching just crumbs, the little bits and pieces that is still potentially remaining in the move. But by that time, the options are priced to the max in relation to the direction of the move. Therefore, your account is not getting any traction. So if you're trying to change that, pay attention, because I'm going to show you some key patterns right here that are happening in the market that you can actually profit from in the next few days. So the idea is this. Instead of listening to the news, learn the moves. Learn various time frames, okay, of a certain type of pattern. If you notice it occurring in multiple time frames, guys, you got a winner. So with that said, learn the 13 market moves. They have nothing to do with Elliott waves, guys. I don't know, like, how can somebody watch last 500 videos and still believe that Elliott waves has anything to do with 13 market moves? 13 market moves formula, guys, is about patterns, divergences, is about sequences of patterns and probabilities. Okay, maybe you're brand new and that's why you may not understand it, so that's fine. You think it's somehow connected with Elliott waves, but it's absolutely not the case. So guys, focus right here, because I'm going to tell you exactly how the fuck to trade Amzn earnings report by utilizing the 13 market move formula right now. Charts, patterns, and probabilities, guys. Okay, first, for the purpose of learning, if you're learning something, I mean, you're getting better as a trader, I mean, that's the main reason to watch this channel. So if you're asking good questions, if you're advancing as a trader, you're going in the right direction, okay? But this right here, guys, for the purpose of the learning part of this video, I want you to answer a simple question. What pattern do you see? This is the chart of Amzn, okay, dating back to July 23rd, 2020. What pattern do you see? So I'm going to give you a minute to answer that. If you know the answer or you think you've got the right answer, feel free to type it in the comments. Okay, and just do that as an exercise so you can actually get better. It doesn't matter if you get this right or wrong, but what pattern do you see here? Okay, I'm going to tell you that majority of the traders, okay, hopefully you got an answer to this already. So majority of the traders, what they see is they see the blue line above orange line. They think this shit is highly bullish. Okay, it's a clear uptrend. Buy the dip. Okay, that's what 99% of the traders see. Now, what the 1% traders see that make a shitload of money is they see this. Okay, it's a clear double top with a ton of divergences on the chart and a bearish crossover in the MACD, pointing to the next move in Amazon, lower, not higher. Now, we've got a few instances. We've got about 3 or 4 bearish reasons to short the hell out of Amazon right here. Then it just becomes a question, do you short it on the bounce or do you short it right now, considering that this by itself could be the very bounce already that you want to short? So then you just boil it down to 2 questions only. Okay, short now or wait till the bounce and short the bounce. And in that case, stair-stepping makes a lot of sense. But let's take a closer look. Now, this chart of Amazon is from July 29th, last night. Okay, so what do you see here? Guys, and what you see here is exactly the pattern that I have described to you in the chart of US dollar, in the chart of a move 6 on the S&P. Guys, it's the same identical type of situation. You got basically top 1, top 2. Okay, what we're missing right here is top 3. Okay, so meaning Amazon is going to announce earnings after hours today. It's very likely, okay, to first bounce right here, maybe about $100, $150, and then it could sell off sharply by tomorrow, Friday, July the 31st. And you may be thinking, well, how low can it sell off? Okay, now first, let's answer the question, what if that spike higher is just going to be so short? Kind of like what we witnessed with the Federal Reserve announcement yesterday. So for about an hour and a half, the market looks like everything is highly positive. Fed is buying, stimulus, okay, you thinking in your head, observing all these green candles that this is the time to get in. Okay, this is the same setup that Amazon is likely to do. So the question is, okay, will it drop sharply right after hours or will it first bounce and then drop? So notice we're not saying it's going to go higher. Period. Okay, we're saying it can go temporarily higher, just like the market went after the Federal Reserve announcement yesterday. Okay, or it just can completely fall the fuck out. Now, I'm going to give you a couple of reasons why, okay, the complete fallout may just come in rather quickly, and that's why you may actually want to consider owning some Amazon puts going into the earnings report. We don't do this often, but with this chart, guys, this move 6, I mean, this move 6, it has a high repetitiveness over the last 10 days in the market overall. Typically, move 6, maybe you watched this video I placed a few years ago, market move 666, after which the market crashes like 10% within, you know, literally a week or two. Guys, these move 6s, they don't surface often. We may get an occasional move 6 pointing to a top that's mixed with some 11s, but when this history of move 6s continuously reappears, maybe day after day, it's something to pay very high attention to. And I think this is the case right here, right now. And clearly, the reason why we would want to pay extra crazy close attention to Amazon specifically, because just like the US dollar, I pointed out to this triple top before the dollar collapses. Okay, this is the same type of pattern. So now we're looking at stuff not in terms of the news or the earnings of Amazon going to be good, bad, fucking doesn't matter. The earnings could be good and the shit could still drop. But in this case, okay, if we did want to talk about the earnings, okay, we believe Amazon is going to have extra high costs that it will report this quarter, and it's actually going to have a very strong miss on the earnings side, not necessarily on the sales side. The sales number is going to look good. The earnings number is going to look bad. So basically, Amazon is going to report a miss on the earnings number due to the higher rise in cost. And the earnings report overall is going to be mixed. It could also report that going into the next quarter, we're going to see elevated costs, okay, such as labor, you know, a bunch of other costs that Amazon has to deal with. And the only part of the company that's really making money, it's been making money in Amazon, is the cloud sector. So it's important to actually look at the next slide I'm going to show you right now, is to evaluate how do these cloud stocks are reacting to the earnings. And sometimes these correlations are going to really show you, okay, how Amazon is actually going to react to the earnings report. See, most of the traders, they focus on the news, all the earnings report. Is it going to bid? Is it going to miss? Is it going to do this, this, this? Like, that does not matter. The ultimate answer that you need to understand as a trader is, how will Amazon shares react to the earnings report? So understanding this is key. So right now, what you see in the chart of Amazon is highly bullish because all you see is this huge solid uptrend, okay? What you don't see is that Amazon can easily hit a level of 27.25 by Monday, right? It could hit 27.25, guys, possibly by tomorrow. So huge increases in the cost of doing business will be the subject of the discussion after Amazon reports earnings today. Possibly some pressure on Amazon margins, okay, due to the competition in the cloud sector, because everybody and their mother-in-law is trying to get into the cloud sector. And even though Amazon's got a great share of that market, okay, there's just too much damn competition, which often puts pressure on the profit margins. Sometimes during such circumstances, the companies have to spending more on advertising, spending more on improving their system. So the costs typically go up to make their product better, okay? And with that, higher costs don't equate to higher earnings per share. So understanding that this is the next move in Amazon and has the highest probability is based on these correlation type trade. For example, if you analyze some of the companies in the cloud sector and reported earnings recently in the last few days, companies such as FFIV, F5 Networks, okay, what do you see? The company has actually reported great earnings. It beat on every number, sales, earnings per share. It beat on its projections for the next quarter. And what happens to FFIV? The stock tanks from 152, which was, by the way, the alert we sent to our subscribers, our paying members on Monday. We've reposted the alert and the alerts on Tuesday when the stock was still at 146. The stock dropped all the way to 136. Now, the options were cheap, and that allowed some of our members to capture the profits up to 900% in that trade. What we have in this particular chart is ticker called NOW or ServiceNow, which is another cloud sector type play. Now, what you should know is this chart looks highly bullish, and that was the alert. We actually posted the alerts yesterday suggesting to short the hell out of this thing because the next leg in the stock is going to be lower. Now, as you can see, it looks almost identical to Amazon chart. There is no basically bearish signs here unless you focus on the divergences and the 13 market moves. You would have no clue that the stock was going to drop after hours, which it did. And it's likely to continue dropping. Now, it's not a small move, guys. It's about a $30 move lower so far. It could be a much greater move lower by the time all said done by tomorrow. But understand that this is a correlation type trade, and most of Amazon earnings actually come as a result of its cloud business, not a result of its retail business or anything else, okay? And the chart is pretty much identical. The next move in Amazon is going to be lower rather than higher. Now, interesting fact, just trying to get you guys understanding how powerful it is to read the market from the standpoint of chart patterns. Okay, so Intel, okay, chart from July 23rd. The question of the day is, which pattern do you see here? Which pattern do you see here, guys? Type it in the comments if you know what pattern it is. Or if you think you know what pattern it is, type it in the comments real quick. Do it as an exercise to help yourself out. Okay, the answer is simple, guys. This is a head and shoulder pattern. This is your shoulder one. This is your head. This is your second shoulder. What happens after such a well-defined head and shoulder pattern, which actually matches the definition of the time frame for head and shoulders, which have to be exactly 3 months here? Well, after 3 months of such head and shoulders, guys, there's a high probability of this happening, which is exactly what happened. Look at this beautiful drop, close to 20% on Intel shares. Now, remember that the chart I was showing you earlier of S&P 500 was resembling this pattern right here, the head and shoulder pattern on a 5-day, 15 minutes. So the most critical point of data you need to calculate as a trader is, okay, how recent has a certain pattern developed? Because from a standpoint of trading weekly options, you need to have this information in order to identify the next move and the timing of the next move. So this chart clearly shows you it's a daily chart, a longer time frame chart, but the pattern on the S&P 500 chart in the 5-day, 15 minutes is the same right now. So there's a high elevated probability of the market actually doing this. Now, Apple, guys, what chart pattern do you see right here on Apple? Now, a few videos ago, where it was a generally very unpopular calculation, we've pointed out that Apple is creating the top at a level of 380, 390. Now, nobody clearly wanted to hear us, but the chart pattern is identical to that of the other chart patterns I've just shown you. And so clearly we get that move lower. We're getting a small bounce right now. And we're likely to get a substantial drop lower in Apple to a level about 349 in the very near term here over the course of the next 7 days. But understanding how to read this before the general consensus arrives there, because the main point of the video, you want to be a step ahead of the market, okay? You don't want to be taking action when it's too late to be taking action, okay? That's not a way to be making a substantial amount of money. So the bottom line is understand how this chart pattern is created, okay? Combining it with 13 market moves will get you a step ahead of the market. Zoom, okay, we predicted the sharp drop in Zoom just last week, okay? And it's the same pattern. There's plenty more room for Zoom video to drop, at least retest that 210 level, 205 level in Zoom over the course of the next 7 days. It's the same freaking pattern. It's a double top at this point, becoming a triple top formation. Same pattern on Tesla, okay? It's a triple top at this point, guys, with the MACD making a diff cross as we speak, okay? So all of these stuff, guys, if you take a closer look at the chart from Tesla yesterday on the 29th, guys, this is exactly identical pattern of a longer time frame move 6 that we typically use on the daily chart, but here you can clearly apply it on this daily chart. This is a move 6 formation that will resolve into a substantial drop from here. So get ready, guys. Some amazing opportunities are coming your way right here. The last thought I want to leave you with, the market is highly bullish on gold right now. They're expecting gold. Now you got pretty much every analyst on board that's been dogging gold since we were bullish gold. We were bullish gold since $1,200, guys. You can go and watch every video I've posted here, with the exception of a couple of predictions we have made when gold has made some substantial drops. Now we have a unique situation developing that I wanted to bring your attention to in this brief video, and that is, last time we had a substantial sell-off in the market in March, okay? You would think that gold would be moving higher while the market was crashing, but gold was dropping as well. Look at this huge move in gold from like 1,750 back to 1,450. That's a $300 move in gold. I'm not saying gold is about to make a $300 move lower, but what I am saying, while everybody's incredibly bullish on gold, the trade is so damn overcrowded. We are due for a nice pullback, and these bear reversal candles on this chart clearly point, including the drop off on the volume, that we can get a meaningful pullback. Meaningful pullback in gold meaning about 80 to 100 point drop over the course of the next 72 hours, which could actually resemble the same conditions we had back in March. Maybe not to the same great magnitude that we had in March, but the same type of behavior is about to repeat itself again. Clearly defined double top in gold before it drops off right here again. So with that said, what does this mean? Well, we can have a situation where gold and S&P 500 are dropping at the same time, considering the sequence that I have pointed out to you in the beginning of the video, which was 6, 7, 6, 7, 10. Okay, we're easily positioned for a 10-20% drop in the market anywhere from 14 to 74 days. We can easily be looking, okay, next week at the market trading at 29.50, possibly looking at the market trading all the way down to 26.80 by September, October time. Guys, if you are not sure how to actually calculate the trades based off of this information, because this is what I have identified. A lot of guys are watching the content on this channel and they're simply not understanding how to utilize this information to put trades like I often show you in my live trading videos, where I take $2 grand to 25K, 4K to 100K, all of those videos, guys, they're based on this very information I'm describing to you right here, right now. So if you simply lack the understanding on how to put this information into an actual trade that could help you grow your account, okay, waste no time, click the link below and gain that understanding that's going to help you. So if you have any questions, click the link below or go to 13marketmoves.com If you click the link below this video in the description, there's actually a link that says there's schedule a 20-minute consultation call with a senior trader here. Make sure you do that. Okay, this market is about to give you opportunities of a lifetime, so don't miss out on them. Take action now. I'll catch you guys on the next trade soon. Let's roll.